Morgan Stanley may buy back shares for the first time in 4 years. Let's talk to Dan Wilchins. He is Reuters Financials company editor. All right, as we said, Morgan Stanley, at its January stress test, may look to get approval to buy back shares first time in 4 years.
Yeah, so Morgan Stanley was kind of left out of the buyback frenzy for the last few years because it needed to conserve its capital to buy the rest of Smith Barney from Citigroup. But it looks like they're going to take the next step and try to get approval to buy it back. Other people expected to do the same include Citigroup and Bank of America. And what's nice is that the Fed gives you kind of a mulligan for these stress tests. If you submit a plan and the Fed decides that maybe you should rethink it, maybe you're not strong enough to actually buy back the shares that you want to, then the Fed will let you submit another plan.
Because this did not reflect well on Vikram Panda back when Citi tried to do this earlier in the year,
exactly.
Right?
So last year Vikram failed and he was out. Mike O'Neill, it was one of the things that led to Mike O'Neill to push him out in October, that was.
But sort of a double-edged sword, though, when it comes to buying back shares, because it's money that you're not investing to grow the business.
Right. So I mean, a lot of investors will say, oh, it's the next step for the banks. It's a good thing. It shows that they're healing, which is true. But it's also true that companies that return money to shareholders don't have a better place to invest it. And so essentially you're saying congratulations, you're now a dull utility that can return a ton of money to shareholders.
All right. Well, stock's up 2.5% today. Let's quickly go overseas and talk about two big stories there. HSBC with their record fine and LIBOR finally some arrests.
So in London, we had the Serious Fraud Office arresting 3 people. It's the first arrest from the LIBOR probe, and it's definitely a big deal. It shows the regulators are clamping down and stepping things up. HSBC, a $1.9 billion settlement, that's pretty big.
All right, Dan Wilchins, thank you so much. I'm going to turn now and look at the broader markets and see what they're doing. We've had a nice tech rally today that's taken the NASDAQ up over 1%. Apple more than a 3% gain today. The S&P 500 retracing losses since the presidential election. The Dow's on pace to post the longest streak of daily gains since a 7-day run in early March. So things looking good there. I'm going to move now to the hotspot. And as I do, remember, check out the snaps at the bottom of the screen for more news of the day. Joined now by Fred Katayama, Reuters anchor. Hello there. Some stocks that are moving today. This just out, John Malone's Liberty Media taking over TripAdvisor.
Right, TripAdvisor controlled by Barry Diller. He disclosed he bought 5 million shares of TripAdvisor, but he paid a hefty premium because he's paying $62.50 a share. Yeah. That stock rose 7% today to just north of $41. A hefty price to pay for control of 57% control of the voting stock.
TripAdvisor's up about 7.5% today. Barry Diller stepping down as chairman of the board.
He'll remain, though, as a director.
As a director there. Okay, moving on, let's talk about Delta, because this has been brewing for a couple of days now. It looks like it's going through buying 49% stake in Virgin Atlantic from Singapore Airlines.
And this is very important because what it does is it allows them greater access to Heathrow. Heathrow, of course, is London's airport, and it's the largest airport in Europe. They're the number 2 player worldwide so far, Delta, at least in the U.S.,
right,
after United Continental. This will really help them expand. They'll get 24 to 25% share of that transatlantic traffic.
Singapore choosing to focus more on Asia.
Right.
In terms of
and it's a good time also for Delta because they expanded their New York operations. You know, they've got really great restaurants, food there too. Sweet deal. If you've ever been there, order off the tablet. Really
I would agree. Stock's up 6% today.
Sweet for investors too. They
Sweet
like it.
For
Tasty
investors.
For them,
All right, Intel. Let's go to chip making because Intel now saying that they've got the manufacturing technology for these chips that are called systems on a chip for smartphones, tablets, the all-important mobile industry where they lag behind Qualcomm.
Qualcomm is a big leader over there, and Intel's been the laggard. Well, Intel says now it's developed this new technology, manufacturing technology, that'll enable them to mass produce these chips. They're saying that they should be able to produce in high volume in 2013. Yeah. Remember, they have been a laggard, so this is something that people are really looking at.
All right, Intel's up 2.5%.
Yeah, sweet for investors.
Let's move back to the market monitor and talk about Facebook because Facebook's had a good run-up lately. Now Capstone Research raises price target from $35. To $35.
$35 from $26.
That's
you see that? You know, Facebook's been doing pretty well lately. It's from its nadir was trading well south of $20. Going up about 50%.
That's right.
Well, Capstone's saying it's putting a buy rating on the stock.
All right, you know what this means, Fred?
What?
Drum roll, please. Time for the Zuckulator.
Well, he's got reason to smile, too. He's smiling over there.
This is the biggest jump that we've seen in a while at $14 billion.
No, things have really been going in his direction.
He's only in the red $5 billion there.
Yeah, he survived that lockout thing, so you know.
He sure did. All right, and finally, let's close out with SiriusXM, looking for some good karma, you might say.
You're talking about Mel Karmazin, who
Successor to Mel
controls, of course,
Karmazin.
Sirius.
Yeah.
XM. Yeah, sources are saying a candidate is emerged as a leading candidate to replace him. His name is Jim Meyer. He's vice president of sales and operations. Why him? Well, he joined at the same time as Carmen's did in 2004. But he is the one who overlooks the relationships with the auto industry. And of course, SiriusXM, where do you hear that radio? On your car.
For better or worse.
Yeah,
yeah. It
when
limits
you're
their
driving.
business, but yeah.
Yeah, but so that is where the bulk of the company's revenues come from. Another reason why he's a leading candidate? Well, he's close to Eddie Hartenstein, who's a non-executive chairman of SiriusXM. Why is that important? Because he is on the search committee.
All right, Fred, thanks for the insight. Remember, folks, follow us on Twitter at Reuters Insider and check out our YouTube channel, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.